Hello everyone. I am Manzi. And today I want to ask you something very simple, but extremely uncomfortable. Are you really trading, or are you just guessing in front of a chart? Because today I'm going to share a checklist with you. And if you don't have this in your trading routine, then honestly, you are not trading the market. You are just donating money to it. Understanding what the market really is. The market is not random. It is not emotional. It is not chaos. It is structure. And in this structure, only those survive who understand levels, trends, and behavior. Now let me ask you again. Do you have this data? Breakouts, the real language of the market. Let's start with breakouts. Monthly, weekly, and daily time frame. Breakouts are not just price movements. They are decisions made by institutions. Let's talk about monthly breakout. Do you track monthly breakouts? If not, you are missing the biggest picture. Example: a stock has been stuck between 450-500 for 6 months, then suddenly it breaks 510 on monthly close. That is not a candle. That is accumulation turning into expansion. That is smart money revealing its position. Now about weekly breakout. Now come to weekly structure. If monthly shows direction, weekly shows intention. Weekly breakout is where trends actually begin to breathe. If you ignore it, you are entering too early or too late. Both are dangerous. And now, the daily breakout. Daily breakout is where speed happens. Retail traders usually enter here. But without context, it becomes a trap. Because a daily breakout without higher time frame support is often just noise. Consolidation breakout. The smart money zone. Now listen carefully. Consolidation is not no movement. It is preparation. It is silence before expansion. Example: a stock moves sideways in a tight range for 10-15 days, with low volatility. Volume contracts. Then suddenly, it explodes upward with volume. That is not luck. That is accumulation being completed. And most traders miss this phase because it looks boring. Simple moving average crossovers. Trend confirmation system. Now let's talk about moving averages. If you are not watching these, your chart is incomplete. The 20 SMA crossover, short-term strength. When price moves above the 20 SMA, it signals early momentum. Something is waking up. The 50 SMA crossover, trend shift zone. When price crosses 50 SMA, it often confirms a swing trend is forming. This is where professionals start paying attention. The 100 SMA crossover, institutional interest zone. This level is not retail-driven. It reflects medium-term structural change. Institutions begin to accumulate here quietly. The 200 SMA crossover, long-term reversal. When price crosses the 200 SMA, it is not just a trade. It is a regime change. A long-term trend shift is happening. Support and resistance. The foundation. Now let me ask you something very basic. Where is support? Where is resistance? If you cannot answer this, you are trading blind. Example: a stock repeatedly bounces from 300. That is support. A stock repeatedly rejects near 340. That is resistance. Simple logic, but extremely powerful. Without this, entries and exits are just emotional decisions. The hard truth. Now let's be honest. If you don't have monthly breakout tracking, weekly breakout structure, daily breakout understanding, consolidation breakout reading, SMA crossover system, support and resistance mapping, then you are not trading. You are just reacting. And reacting in the market is the fastest way to lose money.